Like much of the Northeast, apartment vacancies are not a problem in Connecticut, but capitalizing on low vacancy rates with some rent growth, not so much. Welcome to Apartment Market Dynamics from MPF Research. I'm Jay Parsons with your Connecticut update. Across the Northeast region of the country, we see generally a few things: lukewarm job growth, not ideal demographics for the apartment market at least, high occupancy rates, and not much rent growth. And that same pattern holds up in the state of Connecticut. Job growth in Connecticut has been consistently mediocre, about 14,000 jobs added annually through Q3, amounting to an expansion rate of only 0.9%, below even the Northeast regional average of 1.4%. We've seen these levels for quite a while now. Of course, the Northeast is home to some mature markets with very limited growth potential. And of those 14,000 jobs added in Connecticut, more than half came in the southwestern portion of the state, closest to New York City. But because supply tends to be so limited in the Northeast region of the country, and particularly in Connecticut, outside of New York and Boston, of course, apartment occupancy rates are almost always high. That's the case in Connecticut as well. 96.7% as of Q3, up 50 basis points in the quarter and up 90 basis points year over year. That puts Connecticut 20 basis points above the Northeast average, and that's just the first time in 5 years that Connecticut has outperformed the region. Here is occupancy among Connecticut's four main metro areas. The Bridgeport, Stamford, Norwalk area ties with Hartford at 97%, New Haven 96.2%, and the Norwich, New London area at 95 flat. All four metros were up year over year. So strong occupancy rates, but again, not much rent growth. For the state, rents up just 0.8% year over year. That marks 7 straight quarters with year-over-year rent growth below 1.5%. It's also below the Northeast regional average of 2.5%, and even that regional average is well below the U.S. norm of 3.7%. And among Connecticut's four metro areas, 2 cut rents in the past year. Rents down 2% year over year in Norwich, New London area, and down 1.4% in the Bridgeport, Stamford, Norwalk area. A little bit of growth in the two other spots, 2.3% in Hartford and 2.1% in New Haven. Going forward, again, it's a mature market. The story's not going to change dramatically. Job growth is unlikely to get significantly better. Occupancy rates should stay high. Construction's going to be fairly limited in most spots. And rent growth should improve a little bit, but certainly isn't expected to jump dramatically given the affordability challenges and also the limited demand tailwinds in the market. And that's going to wrap us up for Connecticut. So until next time, for Apartment Market Dynamics and MPF Research, I'm Jay Parsons. Thank you for watching.
Want more? Go deeper with NPF Research's apartment market reports. From a national level, down to individual metros, to specific neighborhoods, NPF Research has been providing unparalleled apartment market intelligence to the multifamily industry for almost 5 decades. Learn more by contacting us at 877-284-4938 or visit www.npfresearch.com and click on Market Reports.